Hello, this is Chapter 2 of Governmental Accounting. This is just a discussion. This chapter is an overview chapter. So it's basically going to have you build a financial statements, use the way a government would. But it's a big overview, and I'm just going to go over kind of briefly things, because this is very all-encompassing chapter. Basically, state and local governments are encouraged to prepare a comprehensive annual financial report, acronymed CAFR. It's a big, a lot goes into it. Management, discussion, analysis, all the statements, and any required supplemental information. Then, of course, the auditor's opinion. A government will have its primary government, but then it can also have component units, which is a legally separate organization, but maybe that it helps financially or gets helped financially by the government. And you can either blend the component units' finances into the government, or you could have them have discrete presentation where they're actually presented separately in a separate column. There are government accounting reports by major fund, and a fund has to have its own thing if it meets two categories. It has to hit both categories. 10% of total. It basically has to be big enough. Has to be big enough to be able to become a major fund and actually have its own column. That's all that means. And it goes through each fund. Here's a statement of net assets. It looks intimidating, but it's really simple once you look at it. I mean, this is government activities, business type activities, and then the total of them combined, and then of course the component unit. Primary government is both business and government combined. Has assets, liabilities, and net assets. Net assets is just equity. But net assets, because no one owns the government, it's a placeholder in this sense. So you have here under net assets, invested in capital assets, net of related debt is just capital assets up here, which is buildings. Anything that number minus the debt is what's left over. So that's actually what the government owns versus the debt that's on it. That's all that is. Restricted means there's a law or a rule that says that money can only be used or those assets can only be used for a certain reason. And then unrestricted is the catch-all. Whatever's left over goes in there. And this is all accrual method. Modified accrual is only in the governmental fund. And that's the complex one. It doesn't have any long-term stuff in it, but it's converted later to be an accrual method on these two statements I'm showing you. And this is a statement of net assets, even crazier. But it's really not that difficult. It just has so many different parts to it because of the business versus government. The business part of the government, and then the services part of the government. So you have the government activities and the business type activities. And then, of course, you have the general revenues, which is like sales tax, property taxes, the normal kind of revenue. You have up here charges for services, and it totals it. And don't worry about that. It's really simple. It's strange looking because there's so much in it. But it's all organized, and it's very streamlined, so it's not hard to pick up. Of course, you have government funds. Each of the funds is going to have a balance sheet, which is sometimes it's like a statement of net assets, sometimes referred to. It's going to have a statement of revenues, expenditures, and changes in fund balances, which is basically an income statement, but there's no expenditures, there's no expenses, it's all expenditures, remember that term. Governmental funds use modified accrual, so they don't track long-term debt or long-term assets until they get to the government-wide. That's the only complex part. I feel like the proprietary is like a business. It's governments like water, solid waste, parking, where they charge you for something. Governmental funds, they have the general fund. Don't let money go in there, because any money in the general fund is usually squandered by government, because it doesn't go to any purpose, so it's just kind of up for grabs. You can use whatever you can use it for whatever you need it for. Not a good idea. Special revenue means it has to be used for a certain purpose. And then there's debt service, which is for debt, and courthouse renovation. Oh, that's for capital expenditures. So don't worry, we'll get into all these in later chapters. This is just an overview. Proprietary, and then fiduciary statements or fiduciary funds are funds that the government is holding. They're holding as a middleman. So they don't own it. They actually are going to distribute it to different people. So basically, they hold on to like employee trusts, pension trusts, private purpose. They hold on to pensions and then distribute them out. And of course, there's no income statement for any of those because there's no money gained or lost. It's just they're a holder. Fiduciary activities are just an intermediary for the government to help move money to where it needs to go. So there's only two statements for that. The asset one, balance sheet, and then the change one, which is kind of like an income statement, but it's not. It just shows where everything changed. And then of course, you have the notes from the financial statement. The most important part is the budgetary comparison schedule. This is what really differentiates government accounting. Is governments are basically, you can call them budget accounting. And this is a schedule of a budget. It just has the original budget, what the final budget was after it's been amended by anything, any kind of ruling, and then the actual amounts. And this is important because actual sometimes isn't always what it was to the budget, and it shows you the difference. This is good for all you out there too. Personally, have a budget to where you track what goes to food, restaurants, entertainment, books, and then have a budget, and then at the end of the month compare your budget with the actual, and you'll be surprised. Just keep along with that. Very important, budget accounting. I think it's not just important in government, but anywhere. This is a good method. Have basically stuff like a financial statement pre-planned of what you want to spend on this area, what you want to spend over here, what revenues you want to bring in, and then you see if you matched what your estimate was. And it's brilliant. You can see revenues, expenditures, and then revenues over expenditures, and the year end, and it's just very useful. That's the most useful thing in government accounting is budget accounting, budget comparison schedules. Oh, another thing too. There is a cash flow statement. Yeah, I know. And it uses the direct method, which is a little bit more. It's harder to build because you don't get the back into it. You actually have to show each occurrence of money going or leaving. But it's only in one fund. It's proprietary, the business type fund. So it's not that bad. And cash flow statement is, once I've heard, is also the most important statement, along with the budget. Do a budget too, but cash flow. Always look at the cash flow statement of a business or entity, and then for yourself, do a budget. But yeah, this is it. And of course, I'll do a problem most likely. It's just gonna be building a statement. So, thank you so much, and I'll see you later.